focus on another company then, BEML. Well, that could be, that is a big Make in India theme. And also it has exposure to various segments, whether it's metros, railways, defense, all those segments are flourishing. And the company will be at the center of it. Well, to understand more about how business is shaping up, we're joined by Mr. Shantanu Roy, the CMD of the company. Hi, Mr. Roy. Good morning, and always good to speak to you. Well, let's get the basics out of the way. You've won some orders in the last quarter. So give us an updated order book and break it up segment-wise as well.
Very good morning, Nigel.
Morning.
We definitely have won some orders in the last quarter as well as the last financial year. And the new financial year is again a new beginning for us. Unfortunately, I cannot talk about the present order book that we have since we are in the silent period now. But I can give you a glimpse of the order book of the opportunity size. So talking about the defense opportunity size for 24-25, we have an opportunity size of around 6,000 crores. If I talk about the rail and metro business vertical, we have an opportunity size of around 58,000 crores, out of which around 44,000 crore will be from the rail and 14,000 crore will be from the metro. And if I talk about the mining has always been like that, in an opportunity size of around 3,000 crores every year. And that has been giving us a baseline till now.
Okay. And how optimistic are you that you can get a bulk of this? Defense, I think you mentioned 6,000 crores, rail and metro 58,000 crores, and mining 3,000 crores. What should be a rough hit ratio? This is the opportunity size, I'm guessing, and you would get some part of this.
Yes. The rough hit estimate should be around 50% in rail and metro, as well as mining, as well as defense. Whereas in mining, it should be more than 80%.
Okay, so in defense particularly, you're saying 50%, so around 3,000 crores. But the last time when we spoke to you, you had said that in the next 3 to 4 years, you can expect about 7,000-8,000 crores of defense orders. Do you stand by that, long-term target? And if you can tell us, where do you see the maximum opportunity in the defense space? Is it in high mobility vehicles? Is it in armor recovery vehicles? Just trying to understand where is the traction now?
You're very right. Let me correct you a bit. The opportunity size that I spoke about is for 24-25. And when I said that we can look at a number of around 6,000 to 7,000 crore, what I meant was that it will be the sales numbers in the coming 4 to 5 years. Now the opportunity size for us in the segments, in the core capabilities that we have presently for the coming 4 to 5 years is around 40,000 crores. And the bulk of it will come from the high mobility vehicles. The bulk of it will come from the combat engineering. The bulk of it will come from the armored vehicles. I'm not talking about, the diversification efforts that we'll be putting on, especially, the new business areas, new growth areas. If we are able to do that, this opportunity size will definitely double.
Okay, so that is for defense. Got it. Just to follow up on the metro order book as well, you said the opportunity size is 14,000 crores, and from that you're expecting to bag about 50%. So we're looking at about 7,000 crores for FY25. Correct me if I'm wrong. And from that 7,000 crores, can you tell us, what are the different projects across regions, Bangalore, Mumbai, Hyderabad? What is the kind of visibility that you have in terms of both getting orders as well as execution in the next 1 to 2 years?
First, let me talk about the order book, the order opportunities. Order opportunity is the Chennai Metro. There are 2 projects in Chennai. Then Mumbai, we have 3 projects which have already been announced. The tender is out. We also have, some extension in the existing order book for Bangalore Metro. We will have more opportunity for the Bangalore Metro, the new lines that have been announced. We also have the Patna Metro. So these are the opportunities that are right there in front of us. As far as the execution is concerned, we have basically 2 projects in Metro which are under execution. One is the Mumbai Metro, Line 2, Line 7, and the second is the Bangalore Metro for the 318 cars. So these are the 2 projects which are under execution presently.
Mr. Roy, good morning. Good to see you back on the program, sir. For each of these segments, defense, rail and metro, what is the outline of a visible pipeline over the next couple of years? If you can give us those numbers.
Well, I think I gave you an outline about the
Is
24-25 financial year.
Yeah,
And I
but
also
beyond
gave an
24
outline about the next 4 to 5 years in defense and rail and metro. So
Right.
we can extrapolate from that basically, and
Okay.
it need not be double in the next year. So what I can see is that from the rail and metro sector itself, there can be an opportunity size of around 90,000 crores in next couple of years, including this year. And from the defense and aerospace, it should be around 50,000 crore it should be around 12 to 15,000 crore for BML.
Specifically on defense and defense vehicles, right? Armored vehicles, etc., which is a big focus area for the government. I mean, to strengthen border security, etc. Could you tell us what is the is it going to be a fast-growing segment as you see it, and what can be the opportunity size here, Mr. Roy?
If we talk about the numbers, the opportunity size that we are presently having is around 6,000 crore, which hovers around the high mobility vehicle and as well as the armored vehicles. And there are various variants of the high mobility vehicle for different usages. For example, the platforms for the missile systems, platforms for the strategic forces command. So all put together, this number that I have just mentioned is all put together. And in the coming years also, the 40,000 crore of opportunity size that I just mentioned, it also is basically from the high mobility vehicle and the armored recovery vehicle, plus various variants of the same. As I said, these are our core competencies, and the core competencies are the armored recovery vehicle, the high mobility vehicle, the combat engineering, the bridging systems, which form a part of the combat engineering, the mining, demining, mine layering equipment, which again are part of our combat engineering segment. And on top of this, we have developed some new capabilities in engines. So that should augur well for the company, especially for the main battle tanks that are to come in the future, as well as the existing fleet of the main battle tanks.
Just a very near-term question, Mr. Roy. With elections sort of upon us, will the first quarter largely be very small in as far as fresh order intake is concerned, or work goes on? Tendering, ordering, yeah.
Work definitely goes on. Already certain all these opportunities are in the pipeline, but yes, it may not fructify in the first quarter. It may go up to the second quarter or the third quarter.
Okay, all right. Mr. Roy, just to confirm, so your order book is looking good. The order book opportunity as well is solid. So, most analysts on the street, they believe that you can grow in high teens to around 20% on a CAGR basis for the next few years. That's doable, right?
It is definitely doable.
Okay.
You see, the last year, as I said, it was survive, revive, and thrive. So last year was survival for us. This year will be a year of consolidation for us. And last year, we also had 3 signature moves which will drive the company forward. One was the engine, second was the Vande Bharat, and the third was the high-end mining equipment that we developed. And we can also expect at more signature moves from the company in the coming years, in the coming couple of years.
Okay, all right. So revenue growth of roughly around, on an average, CAGR of close to around 18 to 20% is what we can work with. That's the takeaway that I'm getting for the next 3-4 years.
Okay. We can work with. Yes.
All right, let's work.
That is an uphill task, I must say.
That's an uphill task. And what's gettable? 15%, 16%? Is that gettable?
You see, we are aiming at 20%.
20%. Got it. Okay, so revenue growth is out of the way. I want to focus on margins. I'm reading a Prabhudas Lilladher note, and they're saying that they expect margins to scale to 13.6% in comparison to around that 10%. And the reason they've given is 25% of your workforce is expected to retire in the next 2 years. So employee cost as a percentage of sales will drop around 370 basis points. Do you think that's well and truly on? FY26, the margins are closer to around 14%?
You see, it's very difficult for me to, envisage that as at this point of time. What I can say is that the employee cost we will try to keep it around 20% or around 18%. I don't see it coming down drastically. Number two, even if 25% of the workforce is going to retire in the next couple of years, we are going to have new people on board. In fact, we have already started a massive recruitment drive, and the guys that we have recruited, they are expected to come on board by May. And if we have to grow, we need a workforce also. So the absolute numbers may go up in terms of the revenue cost, in terms of the employee cost, sorry. But the percentage is likely to remain at around this number only. And as far as the margins are concerned, as I said earlier, definitely it will be a much improved number this year. We are expected to hit good numbers. Let us see how it happens. And in the future also, the number that has been speculated, it may happen if we are able to achieve our sales numbers. Because we have a fixed cost, which remains more or less the fixed in number. So as much as the revenue goes up, our margins also go up.
Okay, got that.
Simple,
You
simple
spoke about...
thumb rule.
Okay. You spoke about, 90,000 crore opportunity size in the next 2 to 3 years in rail and metro. I also want to understand, is there any pickup in activity in the international business? Because so far it's a very small portion, but I do know from the last time we chatted that you are looking to expand your presence there. Can you tell us what the next 2 to 3 years would look like and what's the opportunity size?
Well, in international business, traditionally, we have done only mining construction. 95% of our exports has been through mining and construction only. However, we are working on a couple of international projects for the metro sector. And we are also trying to have our maiden entry in the defense exports. So as far as the opportunity size is concerned, it is huge in the international market. But we would like to grow at maybe 5% to 10% as far as our exports are concerned in the coming 2 to 3 years.
So this international metro projects, any idea on what the ballpark size could be in terms of crores? What are we looking at over the next 2 to 3 years, and which geographies are you seeing maximum demand coming from?
The geographies are basically the Middle East and South America. And if I talk about a ballpark figure, it should be in the range of around 2,000, 2,500 crores as far as the rolling stock is concerned.
That's over how many years?
That will be over the 2 to 3 years. Normally, that is the time which is needed for the execution.
Okay, Mr. Roy, on that Nigel's question on margins, last time we spoke, I think this was late Feb, you'd said that there is some reorganization of the company which is underway, and we'll hear more about it soon. Is there anything you'd want to update us with, sir?
Yeah, we have just restructured the organization, done a complete restructuring into strategic business units to have more focus, to have a better efficiency, to have faster decision making, and also creating a leadership pipeline. So we have just implemented it. We have rolled it out from 1st of April. And the results will take some time to come, but I'm very hopeful that it will be beneficial for the company. A lot of other organizations have already are already working with this model, and they have been pretty successful. So this is a tested model, time-tested model, and we are also pretty confident that this will reap very good dividends for the company.
Okay.
All right.
Rolled out from the 1st of April, as you say, and we'll see results over a period of time. Thank you very much, Mr. Roy. Good speaking with you, sir. Appreciate you joining in here on CNBC TV 18.